Guys, I'm just bringing you like an interesting example of what can happen if you are not carefully picking the stock that you invest in, and if you're not diversifying properly. I know a lot of people who have burned themselves with this stock, and probably the pain is not over yet. The blood is tearing on the market of this stock. Probably you have guessed what I'm talking about. You can see it on the screen. I'm talking about Vroom. Vroom, which is basically, very briefly, a digital car dealership. They are trying to disrupt the traditional old school models of car dealership when they have physical facilities and customers have to go into the facility, have to pick the car, have to do all the paperwork on site and take the car from there. So they are just introducing this digital innovative model of digital car dealerships. This is kind of new thing, and we cannot be entirely sure that this is going to be working on the long term. So this is more of an experiment, but I see a lot of market opportunity. I've seen a lot of market opportunity in this company because there are multiple factors that would support basically the future of the company. The first thing is that everything is going digital. So we are used to these trends that everything is moving digital. Basically, we are basically doing things more or less entirely over the internet. And car dealership, basically, we're not riding this wave. So this is basically riding the trends, riding the waves of digitalization. I think so. This is pretty much it might represent the potential. And another thing is that it offers an important competitive edge to the company itself. As just imagine, these companies, there are multiples, not just Vroom. There is another one, Carvana, that is eventually bigger than Vroom and also has a larger market stake than Vroom. So this doesn't have any physical facilities, and this could mean that they can keep the costs, the fixed costs of the company lower, and they can offer more competitive prices to the customers. And when we are talking about products like cars that can cost multiple tens of thousands of US dollars, then these differences can be quite significant. So it's if we suppose that the actors on this market, like the customers, are rational individuals, then of course if there's multiple thousands of difference between the prices of two dealerships, one online dealership and one physically like old school dealership, of course that they're going to pick the more cost efficient one. And besides that, also the entire customer journey is just more efficient, it's more pleasant, it doesn't require so much physical interaction, and it's not as time consuming. So this is the initial idea. Let's see how this unfolds in reality, because a lot of depends on the execution. And as you will see, guys, this is going to be the main problem of this company and the main driver behind this disastrous performance of the stock price. But before we start it, let's look at the mission of the company. The mission statement is Vroom wants to have people find their drive. So that's what they want to achieve, and we will see how much they succeeded in doing so later on. Let's start with a quick analysis of the stock performance over the last year and a quick introduction to the company itself. So Vroom is a New York-based company. It's a company in its early growth stages. It IPO'd in 2020, June 2020. The IPO price was $22 US. Currently, we are way below that price level, so we are below the IPO price. The management is headed by CEO, Chief Executive Officer Paul Hennessy. And just a little bit about the offerings of the company. So the company is mainly dealing with the purchase and the sale of automotives. And they are also doing vehicle reconditioning services, third-party financing, and they are also offering other value-added products and services like insurances and so on. So what they are also, so they are just not just buying and selling the cars, but they are also reconditioning them, and basically they are doing the reconditioning with third parties. And I think if I'm right, they only have one physical facility, reconditioning facility in Texas, and otherwise they are just operating online. So the main thing about is this car dealership is that the customer journey is as much as possible is basically is happening online. So from the moment when you first get in touch with the company, you are looking for the cars which are basically advertised on the website. Then you make your pick, and then also the paperwork and financing is managed online, and then in the end the car is delivered to your doorway. Ideally, we will see that there are some bottlenecks in this process later on, but this is the concept. This is the whole concept around it, and there are multiple players who are offering these services, the digital platforms in the US. It's not only Vroom, so it's not a monopoly. We have some major competitors in the industry. The biggest one is Carvana, company ticker CVNA. Probably this company is the most well-known one. In terms of the market stake, they are the biggest ones, and they have a much larger market capitalization than Vroom. We also have others like Cars.com and TrueCar and other smaller players, but Carvana is the most important competitor, and is, as we would see, it trades at a significant premium compared to Vroom. Okay, so we got the context, and now let's take a quick look at the price performance, the stock performance of the company. So as you can see, guys, the company has been has been under significant pressure during the last year, and it has been significantly underperforming the market, the S&P 500. The performance of the company is disastrous, and also the technical pictures looks very bearish at the moment. So let's look at these disastrous numbers. Everything is red, everything is bleeding on the screen, and you can see basically what I'm seeing basically the investments in this stock are just melting down totally. And a lot of my acquaintances, a lot of my friends are afraid that their investments are totally going to melt away, and they eventually are asking me if this stock is going to go down to zero. I've been seeing days with losses over 5% day by day. So this is nothing unusual in Vroom. And at that point, when you say that this stock cannot sink lower, it still produces like losses over 5%. During the past week, the losses were minus 5%. During the past month, minus 20%. During the past quarter, more than 50%, 56%. And during the past year, the company lost 75% of its market capitalization. So basically 75%, that's huge. That's a huge loss. That's a huge loss. And maybe the pain is not yet over. Maybe it's going to continue. The stock is below all moving averages, the 20-day, the 50-day, the 200-day moving average. As you can see, the stock has been moving downwards in a downward trend. On the midterm, you can see the chart since May. In blue, you can see the lower support line of the trend channel, which has been holding the price for quite a while. And now we are basically a little bit breaking down this lower support line, but we are somewhat tied to it. So we are not detaching too much from this lower support line, but we are breaking down below it. And as you can see, the stock price has been traveling over a larger interval in the last year over the last year. So we went up above 50 USDs. So we've produced some very massive gains compared to the IPO price of 22. Basically the stock price has skyrocketed, has catapulted, and since then we've seen down below 10 USD. We are around 8 USD at the moment. And one thing you can be sure about, guys, that this might not be the end. So even if the stock price is only one digit, earlier it was 2 digits, 20, 30, and so on, we can easily sink down to 4 USD, to 3 USD, to 2 USD. So at this stage, the market is super emotional. The fear, the uncertainty, and doubt is basically taking over everything. We are not driven mainly by the emotions, and there are some important drivers basically around the company, how the company operates currently. They're also like fueling these massive losses that I'm going to talk about a little bit later. And yes, so this is pretty much where we are at the moment. And if we take a look at the fact whether we are oversold or not oversold, we can take a quick look at the RSI to see where we are at the moment. Let's see the RSI, and also let's take a look at a trend indicator, the average directional index. I'm going to use, in this case, I'm using these usually to like get a view how strong it is currently, how strong the trend is currently. So as you can guys see, the RSI index, that is a momentum indicator, and attempts to determine whether the price of a stock is oversold or overbought, is around 30. A value around 20 means that the stock is heavily oversold. We are not far away from 20, but we are above it, so we are still in the somewhat oversold territory. So the stock price is oversold currently, but it's climbing up. Basically, the RSI is climbing up, so we are not super heavily oversold at the moment. And the average directional index, which basically shows it's a reinforcement of the current trend. So the higher values of this indicator mean that represent a stronger trend basically, and a value around 60 means that the trend is unfolded, it's super strong, it's reinforced. And yeah, we have a high value here as well, so everything between 40 and 60 means a reinforced strong unfolding trend. So this basically reinforces the fact that the company, the stock price, is moving heavily in a negative trend at the moment. So everything looks quite bearish in terms of the stock price. And then I just want to highlight one additional thing. So as you can see, guys, the institutional ownership of the stock is 97%. So only like a very minor stake is in the hands of retail investors. I usually like that picture in the stocks that I'm trading, but it's also important to note that the institutional ownership, has been increasing simultaneously with the drop in the stock price. So more and more institutions are finding these lower price levels attractive, and they are entering the stock. So you can see this increase since August 2020. This shouldn't urge you to enter into the stock, because I'm going to highlight a few risks and concerns that, for me at least, tell that investors at the time being should stay away from Vroom. But it's definitely something that is more, it's more positive, because it can be interpreted as a positive basically data. And then let's see what the fundamentals look like currently for Vroom. So this is the revenue by quarter of the company, and as you can see, this data is quite promising. We can see like an exponential increase here. The company is able to generate a massive revenue increase. So this number is more or less highlighted as the first thing, and in each quarter report of the company. So this is the shiny thing that they are showing to the investors. This is the first thing that they talk about, that we were able to increase our revenues by a spectacular number of percents. And this is eventually valid. So this is true. The company is able to boost their profits in the last few quarters. So this is very promising. There's a huge dynamic there. So I would buy into that. But and here comes the tricky part, because we will see some other metrics that are a little bit more concerning than the revenue growth. The gross profit by quarter. So this is also not something super positive at the moment, because as you can see, during the last quarter there was some minor decrease. Before that, there was an exponential growth in the gross profit. The gross profit is basically the difference between the cost and the sale price of the vehicles, or of the units sold by the company. And here, because of the chip shortages and because of other supply chain limitations and bottlenecks, there has been a massive increase in the purchase price of the used vehicles. So basically, the company was not able to generate so much profit per unit in the last quarter, and that is captured by this diagram here. But I would say that before that, we've seen some dynamics. So this sole fact is not really alarming. But the alarming thing comes in the next metric, and this is usually something that I look at. So here we can see that the operating income by quarter of the company is historically negative. It's historically in the red. The company is not able to generate, it's not profitable, it's not able to generate profit. And more importantly, we cannot see any tendency of decreasing these losses. So the price for the company for boosting their revenue is that it also increases its costs, and basically this has an impact. This has an impact on the profitability of the company. So the problem with this one is that we don't see any evidence that the company would be able to increase revenues without burning a lot of money. And we want to see evidence of that. We want to see the margins. We want to see the profitability without increasing costs. We want to have some evidence that the company would be able to maintain this massive revenue growth rate without burning additional money and increasing costs. And we don't see that. And there are a lot of companies like that, and it's totally normal that we want to take out money from the present to invest in the future, and to take out more money from the future. So that's the same for an individual. If you're not investing in your present, if you're not studying something, you wouldn't be able to have a higher income in the future. So that's totally normal. But we always have to be careful with these types of companies, because nothing guarantees that without increasing the headcount further, without pouring like massive amounts of money into marketing, they would be able to increase this massive growth rate. So I think that a lot of investors commit basically a mistake in that regards, that they are pouring unproportionately much money into companies like that don't show any evidence of profitability, that don't show any evidence of the margins. And this is very dangerous, because these companies are mainly valued based on assumptions. Basically, investors are buying the impressive revenue growth rates, the revenue growth numbers, and there are a lot of assumptions. So we cannot say that the value of the company is because the margins are like 30%, and because of the net profit is, I don't know, like 200 million USD. So we are just making assumptions. And when the company starts to present figures that are not in line with these assumptions, the entire narrative based on which the company is valued changes very, very drastically. So remember, guys, fundamentals cannot change so drastically and so rapidly as the narrative. The narrative can change from one moment to the other. If like a contradictory fact arises and basically contradicts the assumptions, the investors can change their narratives. They can change their valuation inputs in a matter of a second. Fundamentals cannot change so rapidly. So that's the reason why you should be very careful with these types of companies. It's totally okay to put money into companies like that, because the risk-reward ratio can be good, and they can basically produce massive yields. But the downside is also unlimited. So that's why you should always be very careful, diversify, and put only like a small fraction of your portfolio into companies that are not bringing evidence of their margins, their growth rates, their historical growth rates, and their profitability. And yes, so that's where we are at the moment. The earnings per share, or the EPS values, are in line with the net losses. So you can see some negative earnings per share values by definition. And just to highlight one more thing again, so guys, eventually the losses were 75% in the last year. So I have to admit that I'm invested in Vroom, and I invested into Vroom at prices higher than the current price levels. I think that my average price that I invested in at is around 17 17 USDs. So still pretty high compared to the current values. But I have to admit that I only put a very small proportion, a very small fraction of my portfolio in Vroom. So that's the reason why I can sleep in a calm manner during night. That's the reason why I can still maintain my position in Vroom without panicking. But I know a lot of people who basically are super concerned, are super stressed out, are panicking because they put a high proportion of their portfolios into Vroom. Some of them put all their money because the price targets were so impressive. Everybody has been talking about the price target around 60 USD. So when the stock price dropped to 30, 25, they just thought that it's a good buying opportunity. And a lot of people are following such an investment strategy that they say that, all right, this stock has fallen enough, so it's trading at a considerable discount compared to the historical price of the stock. And they think that by definition, the downside is also limited, but this is not limited. Downside is basically limitless. A stock can technically go down to zero. We've seen examples like that. The Wirecard has been one example. Okay, behind that, there has been a scandal. But pure execution, reputation risk can also cause a stock to go down significantly. So you should never consider that the downside is limited for a stock because it has fallen considerably. You should always be careful and manage risks. Okay, and let's see what I see currently as the main problems, because you can be sure, guys, when I've seen melting the stock price, I've been doing the research. I've been looking once again into the company reports, and I started to question myself: what am I getting wrong? Are the numbers in the latest report justifying such a considerable meltdown? And basically, I couldn't find the answer in the company reports. I couldn't find the answers in the analyst reviews. And I thought that it has to be something different, and I need to take a closer look at how the company operates. I need to take a closer look at the customers and investigate how the customers think about Vroom, who have been interacting with the company, who have been customers of this company. And that's where I find the answers, and that's what I want to show it to you guys as well. So I've been following the ratings for Vroom since quite a long while, and Consumer Affairs website is basically a website for collecting the reviews and the ratings that the customers give about a company. They are also tracking the Vroom reviews, and I've been noticing a considerable basically decrease in the rating of the company. So it was much better before, and in the recent months it received a lot of negative ratings. Currently it's 2.9 out of 5, so it's a moderate rating. But I think that compared to the basis, or compared to where we were a couple of months ago, we can see a considerable decrease. That means that a lot of customers are giving a negative review about Vroom. And if you start to read into the reviews, you can basically just make sure that something considerable is going wrong with the execution of the company. So people eventually say that buyers should stay away, should basically run away from Vroom. For instance, let's take a look at this one. I warn anyone considering purchasing a car from them: run to the hills quickly and as fast as you can. They are by far all about switch and bait. Yes, true. To the word, they ask you to put a deposit down to hold the car, which they do, promising that you get finance. You get finance, all right? Then choose the highest interest rate and hit you with the okie dokie. So this is just one, but I can see another one. I purchased a car 3 weeks ago from Vroom. They promised it would be here in 10 to 14 days, and the transport team would call me in 3. This guy paid 40Ks. Basically, 3 weeks have passed, and now nobody responds. And according to their delivery tracker, the car has never moved from the location it was originally at. They are a scam. This guy simply says it's a scam. Unless you have too much money and want to give some away for free, stay away from Vroom. So this is what he says. And we can see a bunch of ratings. So we see dozens of that. The process with this company was a disaster from the start. Pre-approval gets you excited about the car, and then when you finally get everything done, amounts change, and they shotgun your credit to multiple sources, putting multiple dings on your credit. In every phone call, there was static or echoes that made it hard to understand. Once it was finally approved and everything was determined, they put in the wrong numbers to the bank and never told us anything. So calling back over and over again, they said they needed to rewrite the paperwork, but this could take days. Also, there was no ticket on this, so it was basically sitting in limbo until we called again. So they are facing some serious problems related to customer support and execution, and basically the entire purpose of digitalization of the car purchase process, to make things more efficient, to offer like an improved customer journey, to save time, to save effort to the customers. So it seems that they are not achieving this target, and eventually the people who are buying into it, they just find themselves in a more complicated process than with the old school traditional car dealerships. And the problem with this is that this is a huge reputational risk. So as you can see from the latest quarterly report of the company, the Vroom is basically pouring massive amounts of money into marketing. Eventually, US citizens say that they see the advertisements of the company and they hear the advertisements of the company all over from day and night and all day. So they are massively and aggressively building the marketing campaigns. And basically with feedbacks like that, you can just destroy your marketing in a matter of a second. And it's not just about the individuals who were disappointed by their customer journey. It's also about the individuals, because they will stay away from Vroom for sure, but it's also about the customers who are reading these reviews. And if the number of these reviews is basically reaching a critical number, a critical level, then it can go viral. It reaches me as well, who is basically sitting on another continent and don't have anything to do with Vroom, but it definitely reaches those who are interested in buying a car with Vroom. And guys, let's be honest, we are not talking about purchasing a chocolate. We are talking about buying cars that can cost, in some cases, over hundreds of thousands of US dollars. So it's a huge amount of money. And I wouldn't like to put myself or anyone in that situation when I'm sending out hundreds of thousands of USDs from my bank account, and basically I don't know where it is, I don't know if it has arrived, and I'm not receiving the product that I've been paying for. So this is, however, I totally empathize with all these feedbacks that I can read on the page, and this is terrible. So it's a huge reputational risk, and if you destroy the reputation of the company with pure execution like that, it's really, really difficult to build up again, and it would not happen for sure overnight. So, and I just wanted to show you guys one more thing. So there are a lot of YouTube videos like that on the internet, like this one. For instance, this guy planned to buy his dream car, that is a BMW i8. He paid 63,000 USDs for the car, and basically he opted for a payment method with a check. So instead of a wire transfer, he's been paying for the car with a check, because basically he thought that by wire transfer, if he sends out the amount, that would never come back again. If something goes wrong with the check, the amount goes out of the bank account, but still it's the bank owns it, and he found this way more secure. And basically the company, the Vroom company, was not able to tell if where his check is, if his check has arrived. So they just lost total track of the check, and they were not even able to tell if they cashed in with the check. So if they basically took the cash from the bank using the check. So it was just a total chaos, and nobody reached out to this guy. So he has been calling Vroom a couple of times, staying multiple hours on the phone while he reached a customer representative. No one reached out to him. His money has left the bank account, saying once again 63,000 USDs. and he was not sure, and the company couldn't say if the money reached them or not, and they couldn't say where the check is. So this is just horrible. This is eventually a nightmare. I will put you guys the link in the description. You can watch this video. There are multiple videos like that. This is horrible, so I wouldn't be in that position. And I would, if I would hear stories like that, I would avoid companies like Vroom, and I would just go back to the traditional dealership where I know that my money is safe, I get what I buy, and so on. So currently, after this price drop, the only indicator that we can use to value Vroom is the price per sales indicator. Sales are always positive, so the current price per sales ratio, as you can see, is 0.47, way below the historical values. Carvana, which is a competitor, has a price per sales ratio of 1.76, as you can see here. So it has a huge, it's trading at a huge premium. Vroom has trading at a huge discount. Is this discount reasonable? I would say yes, taking into account the risks around execution, the risks around the reputation. I would say that it's reasonable that Vroom trades at this discount. I wouldn't say that the current value, at the current values, the stock is a bargain. So as I said, I'm just holding a small proportion of my portfolio in Vroom, and that's why I'm sleeping in a calm manner. I bought the company on the long term, for the long term, so I'm holding it. I'm not changing my mind based on shorter term changes. It might be something that I don't profit from. It can be the case. In that case, it was a bad bet, but I'm diversifying, so I'm preparing for those cases. I cannot say that if I pick 100 stocks, then all 100 of these is going to be profitable. So every investor calculates with some wrong bets, and it might be the case that Vroom is one of these wrong bets. For those of you guys who are thinking about Vroom, if you should buy it or not, taking into account the mess around the execution with the company, the poor customer journeys, the customer complaints, basically the decreasing ratings from the customers, I would say that you should definitely stay away from Vroom for the time being, till that moment that the company shows some evidence that they started to rethink their execution, they started to rethink their processes, they started to build up like a proper customer support who is able to deal and to give effective replies or answers to the customer complaints. But till that moment in time, please don't touch this stock, because you might get severely burned. And I know that a lot of people say that it's a bargain, it's 8 USD, it's 9 USD. Yes, it is, but it can definitely go lower, and it can sink down to 5 USD to 4 USD. We don't know it yet. At this stage, everything is basically driven by the sentiment of the market. So hopefully, guys, I was able to present you like a holistic picture of the stock, and I was able to partly or totally answer your questions and calm down your concerns related to Vroom. Never put all your eggs into one single bucket, and this way you would be able to stay calm and basically keep the stocks on the long term. But at this stage, taking into account what's going on around the company, be super cautious with Vroom even at the current price levels. So thank you very much, guys, for watching my video. This is what I wanted to speak up about, because I think it's a very interesting case study for those of you guys who are investing, for myself as well. I hope you found this useful and you could learn something from this discussion around Vroom. And yeah, guys, before we leave, you could give me one huge favor as usually. So please, in order to not in order to receive my future updates, my future stock analysis, my macroeconomic analysis, and basically all my content around the investments, please make sure that you subscribe to my channel and hit the subscribe button right now. You won't regret it for sure, and it would be super important to me as I'm building this community, and I would like to bring you as many of you guys who are interested in investing together as possible. It's really motivating if I see that people are watching these videos and are appreciating it and take out something useful from it. So if you could just hit that subscribe button, that would be much appreciated. And let's interact. Let's share stories. Let's share trading ideas. Let's be interactive, and let's trade in a community, because I think that we can learn a lot from each other. So thanks for doing so in advance, guys. I'm really looking forward to see what this 2022 year holds for us from an investing perspective. It has been a disastrous start of the year in terms of the growth stocks. The macroeconomic environment is not really favorable for those of you guys who are investing in growth stocks. But my impression is that this is going to be just a temporary thing. Tapering higher interest rates, 2013, we've seen evidences like that. Yes, there is some kind of reset when rates start to hike, but my impression is that this is going to be temporary, and company earnings fundamentals, strong and improving fundamentals, are going to offset the effect of the rate hike. So I think that on the longer term, and I'm thinking on the longer term always, we are not going with the hype. I think that on the longer term, tech stocks, growth stocks are going to pay off. So just keep calm, stay invested on the long term. Let's see how this unfolds. I've been coming back. I'm going to come back supporting you with analysis, so you won't feel yourself lonely and lost in a miserable market. So I will be back, guys. Thank you very much. Take care. Have a very successful trading. Happy New Year's once again, and see you very soon with some very interesting new updates from myself on popular stocks and good value plays. So see you soon, guys. Take care. Bye.